Hi friends, welcome to Konexio Technical Insight. I am Rahul Randeria and I will be conducting today's show. Today we would be discussing regarding the trends, the setups, the technical indicators, the candlestick patterns in Nifty, Bank Nifty as well as on the different asset classes. Now first of all let us discuss what we have mentioned in our last video. In our last video we have mentioned that markets have entered into overbought territory. Some sort of profit booking cannot be ruled out, but the primary trend remains to be still intact. That means positive. So wait for some dip and then buy at the lower levels. Though we were expecting a dip on Monday or Tuesday, but what we call due to the geopolitical tension, we saw a dip coming in the middle of the week. Nifty made a low almost near 17,160, and then on intraday basis in the second half, it rallied and ended on a positive note. And on Friday also, what we have seen, Nifty ended with flat close. So on day to day basis, week on week basis, Nifty has been closing on a positive territory. But as I said in the last video also that Nifty has entered into some sort of overbought territory. So profit booking or consolidation cannot be ruled out. Now let us discuss the charts of Nifty and let us try to figure out what could be the trend for the next week. So let us go to the Nifty daily charts first. This is the Nifty daily charts. Now you can see from October 2021, Nifty has been into a time correction. We have seen a huge volatility. You can see this wave again going back up, again significantly falling down, again recovering, again coming down, and again recovering. Now, during this period from here to here, you can see the time of correction is long, but the bounce back is in a very short span of time. Here also you can see the time taking to fall it is long, but the bounce back is high. I mean to say bounce back in is in short span of time. Now here also you can see it has taken more time, but the recovery is sharp. That means it is in a time correction. Markets are into a consolidation phase, and since these levels we have been mentioning in our all videos that Nifty has potential to test the levels of 18,000. Now you can see we have almost Nifty has tested the levels of 17,490. Now let us try to make some patterns or a parallel line which we have been mentioning since long period of time in our videos. And this was the pattern which we have been discussing for a long time. And on basis of this, we were expecting that Nifty can test the level of 18,000. So yes, most probably we are expecting a breakout from this channel, and 18,000 mark is the target. But we were expecting this target to be achieved in October, September or October. But as I said that the rallies are in a very short span of time. So maybe sooner or later this will break. But now let us see what could happen in next week. Next week is a truncated week. We have a holiday on the expiry day. I mean, this is a Thursday. So maybe the expiry could be on Wednesday. Thursday is a holiday for Muharram. So maybe some sort of truncated week and some sort of high volatility sessions cannot be ruled out for the whole next week. So we are expecting markets to consolidate. It could trade in sideways to down. So maybe some sort of profit booking also cannot be ruled out. But upside from these levels seems to be slight uh, cap on the upside. Maybe not major upside is seen at least for the next week. So my market might be into a consolidation phase. It might trade sideways to down. So now let us see what we have observed on the weekly charts. This was the daily charts. This is the weekly charts, and as I said, since last many weeks, Nifty has been moving or giving positive close here. You can see here, here. So in this last 6 weeks, 4 weeks have been, 5 weeks have been on the positive side, and just I mean to say 6 to 7 weeks, 5 weeks have been on the positive sides, and 3 weeks has been on the negative side. And again, looking at this pattern, we feel that breakout cannot be ruled out. So RSI has also entered into overbought territory on the daily charts. So as I said, we can see some sort of consolidation, some sort of exhaustion, some sort of profit booking at the higher levels. So traders are suggested to trade or just try to book profits at the higher levels and just wait for Nifty to correct and then enter long at the lower levels. So the important support in the Nifty for the next week are placed at 17,265 is the first support. Then second support is placed at 17,161 and third support is placed at 16,929. Whereas on the upside, the first resistance is placed at 17,555. Second resistance is placed at 17,667 and third resistance is placed at 17,842. So these are the supports and resistance levels in the Nifty. Traders should try to follow these important levels and trade accordingly in the direction of the trend for the next week. So friends, now let us go to the Bank Nifty charts and we'll try to figure out what we have observed uh, technically, and we'll see what could be the trend for the next week. Now here also we have been mentioning about a downward falling channel, and it has given a breakout last week. I mean to say last week. This was the channel which we have been mentioning since many weeks. So definitely Bank Nifty has given a breakout. Again, here also you can clearly see that RSI has entered into an overbought territory. Here it is overbought territory and it is showing some sort of exhaustion, some sort of tiredness at higher levels. Now, due to RBI policy rate hike, repo rate hike last week, we might see some sort of you know uh, consolidation or profit booking at the higher levels. This rate hike was already been discounted because you can see Bank Nifty has rallied from the levels of 34,476 till 38,000. So almost more than 3,500 points rally in the last 2 to 3 weeks. So definitely this rate hike has been discounted. So maybe some sort of profit booking or consolidation cannot be ruled out. So uh, the view remains still that consolidation might be there because of truncated week in the next week. Uh, Upside is kept at least for the next week. So one should try to book profits those who are long or those who are having profits in Nifty and Bank Nifty. Wait for some sizable correction and then enter long at the lower levels. Now let us see the important supports and resistance level in the Bank Nifty for the next week. The important support in the Bank Nifty is placed at 37,632. Then second support is placed at 37,249 and third support is placed at 36,786. Whereas on the upside, the first resistance is placed at 38,231. Second resistance is placed at 38,759 and third resistance is placed at 39,197. So these are the important supports and resistance level in the Bank Nifty. Traders are suggested to follow these levels and trade accordingly. Now let us go to the option analysis, which is the third segment of our show. We'll try to figure out or we'll try to study the data of calls and puts of Nifty and Bank Nifty, the implied volatility, the open interest of this option data, and we'll try to figure out what could be the trend for the next week. As I said, next week is a truncated week, so next week is going to be highly volatile. It could be sideways to down or a consolidation phase for markets, at least for the next week. So now let us see Nifty calls, what we have observed. In Nifty calls, you can see on the screen, there has been the rise in the open interest of 17,500 calls, then 17,600 calls, 17,700 calls, and almost in 17,800 calls also there has been a rise in the open interest. The volumes are on the high, implied volatility is in comfort zone. The percentage change in the Nifty options has dropped. So definitely this only the drop in the option premiums is just indicating some sort of tiredness in the Nifty at the higher levels. So now you can see there has been a volume concentration on 17,500. So 17,500 could act as a major resistance because the weekly high was 17,490. So if it breaks 17,500, then only Nifty can scale higher, maybe to 17,700 or mark. But this seems to be little uh, what we call difficult because the concentration of the volumes might be the smart money might have started writing out of the money calls because uh, next week is a truncated week, as I said, and it could be only it could be at least a week for the option writers, maybe call writers and put writers. So this could again give an indication that markets might remain in a broad range. Selling pressure could emerge at the higher levels, and at the lower level also buying could emerge. So maybe Nifty might trade in the range of maybe 1.5% from here and there from the current closing. So now let us observe what we have tried to figure out in Nifty puts. In Nifty puts, you will see on the screen that the action was seen in 17,300 puts, then 17,200 puts, 17,100 puts, and even 17,000 puts, which is the psychological mark for on the technical levels. Now here again also you can see rise in the volumes, rise in open interest, dropping in option premiums, and implied volatility is on the rise. And implied volatility is between 17.64 to 18.59. Now here, as I said, in Nifty calls also there has been a drop in the option prices, and Nifty put also there has been a drop in the option prices. Here the important thing is there has been a drop in option prices supported with rise in the implied volatility. So maybe next week, most probably 17,100 to 17,000 could act as a strong support. So as I said, next week could be a range bound trade in Nifty. On the upper side, 17,500 could be the band. On the lower side, 17,100 to 17,000 could be the lower band. So Nifty might trade in this particular band of 400, 500 points here and there. But looking at the charts and combining this thing, some sort of exhaustion, tiredness cannot be ruled out from these levels. So now let us see what we have observed in Bank Nifty calls. In Bank Nifty calls, you can see the action was seen in 38,200 calls, then 38,500 calls, 39,000 calls. Again, in maybe you can see 39,200 calls. Now here also there is a mix. The percentage change is not that much high or low. It is just minor. But you can see that implied volatility is going higher. 60, it is between 16.31 to 17.5. So if there is any sort of gap up opening or minor gap up opening, maybe 150 points in Bank Nifty, we might see implied volatility going into some sort of risky zone, and from those levels we might see selling pressure coming in at the higher levels. And charts are also recommending that Bank Nifty is also showing some sort of exhaustion or tiredness at the higher levels. So as I said, on the downside, on the upside, 38,500 could act as a major resistance in Bank Nifty. Now let us try to see or try to analyze what we have observed in Bank Nifty puts. In Bank Nifty puts, the action was seen in 36,600 puts, 37,000 puts, then 37,500 puts, and again 37,800 puts also, which I have not marked over here, but there has been a rise in the volumes and open interest. Now here, as we have been saying, that there has been a sharp rise in the last couple of weeks, and also last week we have seen uh, Nifty was trading with positive stance. Only there was a single day where we have seen a drop and again a rise. So now you can see there has been a significant drop in the option premium. The implied volatility is has entered in the danger zone. You can see the implied volatility is between 20.36 to 23.21. Now here, what we have seen that the smart money might have done put writing. That is the reason we have seen that Bank Nifty was holding its ground, and still until and unless we don't see some sort of shedding or profit booking in Bank Nifty, the only thing which we can bet on is the implied volatility. So it is going to be a volatility play for the next week because of a truncated week, and the time value or time decay would be the play for the next week. So the next week is going to be for option writers, the call writers and put writers in Nifty and Bank Nifty. So as I said, if we combine the charts and option data of both Nifty and Bank Nifty, we feel that next week is going to be a week for consolidation. Markets might move zigzag way this way. Selling pressure could emerge at the higher levels again after a sizable correction, maybe 1.5% or 2% correction. There might be buying coming in at the lower level. So it is going to be a difficult for traders. But yes, definitely it is going to be a delta play or a time value play for the option writers. So it is going to be the whole week for the option writers, call options and put option writers. So now let us go to the final segment of our show, which is positional call. I've identified one stock from the downstream companies, oil and gas downstream companies. The name of the stock is IOC. Now let us go to the charts and try to figure out what I have identified and how the stock could perform from these levels. The stock has corrected significantly in the last couple of months. It has consolidated. Now here you can see the stock has dropped from higher levels of almost 90, or even if we go still far, then the stock has corrected from the levels of 95. It is the adjusted price. Now here you can see the stock was making low tops, low bottoms. Here, when the prices has been consolidating, again the RSI has also been consolidating. Now RSI is on the up move, the stock is consolidated. It is not a positive divergence, but still the RSI is signaling a positive stance that the stock has potential to rally from these levels. Now let me try to draw a pattern. The stock has formed a triangle formation or a breakout on the daily charts, you can see here. So the stock is getting, or it is picking up momentum slowly and gradually from these levels. Let me put volumes also, so we will uh, have a clear view of the price, volume, and indication. Uh, Now see, this was a breakout supported with strong volumes. RSI is also into a comfort zone, so the stock has potential to rally from these levels. So it is a triangular breakout. So short-term positional traders or swing traders can buy the stock in the range of 73 and on corrections to 70 or 71. The stock has potential to test these levels of almost 82. This is the candle area. Now the height of this triangle is 10 rupees. So from breakout point, which is 72, the stock has potential to test the levels of 82 in next 2 to 3 months. So swing traders, positional traders can accumulate the stock in the range of 73 to 71 for an upside target of 82 in next 2 to 3 months. So thank you friends for watching the show. Let's conclude the show. Any suggestion you can give in the comment box. Thank you very much and have a nice trading week.